We'll turn our attention now to the livestock markets. As you know, we were in Houston last week for the annual Cattle Industry Convention and NCBA trade show. It was at the trade show that we had the chance to visit with DTN Livestock Analyst Shayle Stewart. Last week, the latest cattle inventory report was released, which added some optimism for cattle producers that higher prices could soon be realized in the cattle industry. We began the conversation with Shayle by asking her about the conversations she was having with producers as they attended this year's convention. We're here at the NCBA trade show, catching up now with Shayle Stewart of DTN. Shayle, good to have you on the program. Thanks for joining us.
Hey, Bryce, thanks for the opportunity. While we were both down here in Houston, we might as well do an interview and talk about the cattle market because that's been the highlight of the entire event. We've had a lot of extremely bullish reports come out, and so I know cattle producers have been chatting about the markets, the trajectory, both short-term and long-term, so I figured we might as well as too.
Well, let's talk about that. Folks, of course, walking by here at the DTN booth at the trade show. What has been the sentiment of the cattle producer this past week?
Ooh, good question. And honestly, the cattle inventory report couldn't have came at a better time. This past week, cash cattle started trading stronger as well. So not only did you have the extremely bullish cattle inventory report for those who are looking to sell, maybe not extremely bullish for those looking to buy, as those female prices are obviously going to get higher, given that we saw an extreme reduction in the beef cow herd and also in the beef replacement heifers. So honestly, producers have been really excited, those who have cattle to market this upcoming year and for the years ahead, just simply as supply and demand economics start to weigh in on the marketplace. Obviously, fewer beef cows means that there's going to be fewer calves to market in the fall, and given the heightened demand that we've seen both here domestically and internationally, we expect that those prices are going to be stoutly higher than what they were last year.
That report showed 2% less inventory than the past year. I think the producer question has been, okay, so what are the factors need to be watching over the next year to see if we continue to see that herd liquidation? What are your thoughts on that?
You know, I really think that the cattle inventory report was a highlight and an absolute representation of the drought liquidation phase and cycle that we see producers enduring now. So obviously, you know that drought really impacted much of cow-calf country in 2021. But honestly, as we look to 2022, given that feed resources were so depleted this last year, we're most likely going to see in the 2023 January report that we're in a liquidation cycle, and then that's not going to be the end point that 2022 saw. It's likely that next year we even see a reduction in our beef cow numbers. So as you mentioned, it was a reduction by 2%, but we are at the lowest that we've seen beef cows in the United States be for the last 7 years. So that 2%, that sounds significant, but really I think it's more important to hone in on where that number aligns in the past years. And like I said, we are at the fewest beef cow numbers that the U.S. has had in the last 7 years.
So that, as we look forward here, especially here at the convention, the conversation has been this relationship between the producer and the packer, kind of that leverage conversation. How do you see that moving forward here in 2022? The conversation has at least been the producer might have the upper hand here soon, right?
You know, the producer is always going to have somewhat of an uphill battle given that it's so monopolized on that upper level. But thankfully, there are going to be more dollars on the table that producers can look to take. And I think that they're going to see that. They're going to see that in 2022, 2023, and potentially even 2024 as we look at the trajectory about what a smaller cow herd means. And so as packers see this robust demand, like I said, both internationally and here domestically, they should be able to justify paying more for fat cattle, and then feedlots should be able to justify paying more for feeder cattle. So I think the producer is going to see higher prices and robust demand on their level.
You mentioned the drought situation. You call Cody, Wyoming home.
Yes.
Talk about how things look around your area of the country.
Well, you know, in Cody, Wyoming, we do get some snow, but that dang Wyoming wind just blows it on into Colorado or into the Dakotas. So as much of cow-calf country has become accustomed to, we're in drought scenarios as well. So my husband and I, we had to do some liquidating in cow numbers ourselves, just simply because, you know what, with hay prices knocking on $300 a ton in our area, it's hard to justify paying those type of prices. But then at the same time, you have to weigh the mechanisms of, well, if we're going to be in this operation, in this lifestyle, in this interest for an extended period of time, you really have to hone in on the numbers and say, okay, I don't necessarily want to pay $300 a ton this year for hay, but if I'm wanting to jump into females in the years to come, it's going to be really hard if prices get to, you know, that $3,000 mark like what we saw after the 2012 drought. So we sold a few cows this past year, but we're looking to expand as the opportunity arises.
Here on Market Journal, we like to give our analysts the final word. Last thing you'd like to leave our viewers with this week, any particular advice you'd like to leave them with?
Actually, the advice that I just shared with you is probably, I think, one of the most important things that we conceptualize moving forward. You know, drought conditions are really pressing, but it's important to remember not only do we have to look at it from a short-term perspective, but also as a long-term perspective. So many folks we can learn from the 2012 drought, which hindered and really was a detriment for so many southern producers, but we need to remember that what came after 2012 was the market high in 2014. And so as we look at the cow-calf industry and feeder cattle to market in the years to come, let's remember that there's a lot of dollars to hopefully be gained in the next couple of years, 2022, 2023, 2024. And so we need to try, if we're going to be in this market for an extended period of time, to really be able to have something to market in the years to come. So if you can, justify keeping those cows to the best of your ability.
Shayle Stewart of DTN, our guest here on Market Journal. Shayle, great to have you on the program.
Thank you, Bryce. Always a privilege.